Good afternoon, all. Welcome to Succession Retirement Planning, what to do with your premises. Before we start, just to let you know, this is getting recorded. So if you do want a copy of it afterwards, please get in touch with the LMC. But yes, my name's Will Ellis. I will be your host for today. Just a quick thank you to Lancashire and Cumbria LMC for assisting with putting this on and inviting you all. So thank you to them. But yes, let's get started. So today we're going to be talking about succession and retirement planning, and specifically what to do with your premises. So there's around 6 or 7 slides. It's probably going to take maybe 25 minutes, 30 minutes to go through the presentation. There'll then be a Q&A at the end. So if you've got any questions or queries specifically about your individual circumstances, or if you just want anything explaining that we've gone through in a bit more detail, then feel free to pop your questions. There is a Q&A tab right on that top panel there. So if you put your questions in there at any point, and we'll try and go through those at the end. But yes, let's get started. So in terms of what we're going to go through today, so like I said, we're going to talk about what your options are when it comes to your premises, when it comes to succession and retirement planning. We're going to talk about one of those options or a couple of those options in a little bit more detail. So one of those being sale and leaseback. So we'll talk about the pros and the cons of sale and leaseback and what exactly a sale and leaseback is. We'll also talk about potentially putting a lease in place as an alternative to a sale and leaseback. So rather than selling the surgery, perhaps putting a lease in place between the existing and the exiting partners. So we'll talk about how that process works as well. Also transferring the NHS contract to another entity. So to remove the liability of having to sign up to a long-term lease, you could potentially transfer that to another entity, and we'll talk about those options around that as well. And then we'll have a little bit of a slide about how to maximize the value of your premises. So in anticipation of selling the surgery, or putting a lease in place, we'll talk about how you can increase the value of your premises. And then, like I said, we'll have a Q&A at the end if there are any questions or queries at the end. Okay, so what to do with your premises. So there are several options when deciding what to do with your premises upon retirement. So these include finding new partners, which is the first port of call for the majority of practices. I know there's a lot of practices at the moment searching for partners, but there are alternative options there to just GPs if you aren't aware. So a lot of practices now have practice manager partners, for example. You can have nurse practitioners as partners, pharmacists. So there are a lot of alternatives to just perhaps GPs being partners, and actually even non-GPs can hold the contract outright as well. So we've got a couple of clients where a couple of nurses hold the contract and they don't actually have any GPs on their partnership at all. They just employ salaried GPs. So there are alternatives there to just finding incoming GPs as new partners. There are also innovative ways as well to get partners to buy in to partnerships. So there are examples now where you can look at gradual buy-ins. So rather than a partner having to buy in all in one go, which is often one of the stumbling blocks, as you'll be aware of finding partners perhaps unable to find the funds to purchase what is sometimes hundreds of thousands of pounds for a small share in the premises. You can look at gradual buy-in. So perhaps if there's 4 partners and it's a 25% buy-in, rather than them buying in at that 25% all in one go, they could perhaps look at 5% every year for the next 5 years until they get up to that required amount. So there are other ways as well to get around that and to find reasons to get partners to come in and buy into the premises. But failing finding new partners, there are other options out there for you. So one of the options is sale and leaseback. So if you are struggling to find partners, you could potentially go through a sale and leaseback, which effectively would be selling the surgery to an investor. So a third-party investor would come in, purchase the premises. You'd still provide medical services, still hold the GMS or PMS contract, but you'd become tenants of that. Of the practice. You pay rent to the landlord, to the incoming investor. So that's kind of how sale and leaseback works, but we'll talk about the upsides and the downsides of sale and leaseback in a bit more detail in a moment or two. Again, another option is putting a lease in place between the parties. So if you've got a retiring partner, but they want to retain their asset, want to keep the surgery, rather than them selling or rather than having to find somebody to buy them out, they could just simply retain the asset and become the landlord. So you'd have 5 partners, for example, one of which was an ex-partner. So those 5 So the 4 remaining partners and the ex-partner would be the landlords, and they would lease it to the 4 remaining partners. And then as and when the partners leave, then they just become the landlord and take themselves off the contract and off the lease and things. So it also gives a little bit more flexibility for incoming partners as well, that in that model, because the incoming partner, they can then either buy into the partnership, or they can just become tenants and just be leaseholders as well. So it just gives a little bit more flexibility, the putting a lease in place as well. You've got another option, which is merging with another local practice. So again, it is just a case of if the partners are retiring and you're struggling to recruit, pooling resources together with another local practice, perhaps a practice with a younger set of GPs who are likely to be at the practices for longer, might be suitable. So yeah, just exploring that which is obviously very easy now with local PCNs and federations and your local ICB and things. You can explore that option with them certainly. And then transferring the contract to another entity, which we're going to talk about in a little bit more detail anyway. But effectively, it is where you'd no longer hold the GMS contract effectively. You'd no longer be the partnership. That'd disband, and you'd transfer that contract, the GMS contract, to another entity, whether that be a third party, a PCN, a GP federation. But again, we'll talk about that in a moment or two. And then the last resort is closing the surgery and selling the premises to alternative use, which is not what anybody wants to see happen, and is actually one of the main reasons why we have put this presentation together, because we'd come across a number of practices who are having to close their doors because they weren't aware of what options they have, and what alternatives they can do to avoid that from happening, because it's obviously not what anybody wants to see happen. So some of these options that we're talking about today are in place, are there to hopefully stop you ever having to close the surgery and get those patients disbanded. Okay, so like I said, let's talk about some of the options in a little bit more detail. So one of the main options is sale and leaseback. This is again where you'd sell the surgery to an investor, put a lease in place, you'd become leaseholders, you'd no longer own the premises, but you'd still provide medical services. Now, there are a lot of benefits to sale and leaseback, and we'll talk about some of those right now. So one of the things you need to be aware of is your lease rent is going to get fully reimbursed by the NHS. So this is probably one of the first questions we get asked when we take practices through a sale and leaseback is, will the rent that they pay get fully reimbursed? And the answer is yes. So for the duration of your lease, if you sign a 15-year lease through a sale and leaseback, your rent should be fully reimbursed by the NHS for the duration of that lease. So even when you have rent reviews, and even when the landlord instigates a review and increases the rent, that should only be on the proviso that the NHS fully reimburse you up to that level. So there should never be a shortfall in rent. Now, you may have heard horror stories where practices are paying 30, 40, 50% more to the landlord than what they're receiving back in rent. But the main reason for that is because they've just gone and got a standard commercial lease off the internet. They haven't had the correct representation to assist them through the process. So it's very, very important that when you go through a sale and leaseback or go through any sort of decision when it comes to your premises, that you seek advice from specialist surveyors like ourselves, or solicitors as well. So that is very important. Okay, so another thing is it can also reduce the perceived risk and responsibility of property ownership. So when the premises, ultimately, you'll have on a standard commercial lease, the tenants are responsible for the internal repair and the landlord's responsible for the external repair. So when you go through a sale and leaseback, as tenants, you'll no longer have to worry about the external repair and maintenance of the premises. However, what does sometimes happen with primary care is the landlords don't actually want that responsibility. So they may bat that back to you as tenants. If that is the case, then you can withhold some of the money that you pay to, or some of the money that you receive from the NHS. So rather than paying that in full to the landlord, you can retain somewhere between 5 and 7.5% of that rent. And the idea is you put that into a sinking fund and use that money to pay for any external repairs and maintenance of the premises. So either A, the landlord's going to be responsible for the external repair, or B, you'll be responsible, but you'll be able to retain a proportion of that money, which will hopefully fund any repairs needed. It will also, when you go through a sale and leaseback, it's going to remove the burden of ongoing capital investment. So it's not your premises anymore. You're not going to own that premises, so it's no longer your responsibility to upgrade and improve or even extend the surgery. That falls upon the landlord as their responsibility. And it can also help attract new GP partners as well when you're in a sale, when you go through a sale and leaseback. And the main reason for that is when you're in a leasehold premises, it does appear to be a little bit easier to find incoming partners willing to sign up to the partnership. And the main reason for that is because they're not having to find hundreds of thousands of pounds to buy in. It's literally just a signatory on a lease, so it's just easier and more attractive to partners. Now, it's not a magic wand. There are still issues with being signatories on a lease. There's still liabilities to signing up to a long-term lease, but in our experience, it's just seen as a little bit easier to recruit when you're in a leasehold rather than when you're in owner-occupied premises. Having a lease will also have generally create higher premium value of the premises. So when you go through a sale and leaseback, the surgery is going to be valued a little bit higher than it would if you just had a partnership change. So if you ever have a partnership change, the surgery is valued based on it being owner occupied, which comes with its own risks because effectively the surgery could cease to operate the very next day. So that has to be taken into account when you undertake a valuation. Now, when you go through a sale and leaseback, you've got security there of the rents because you've got that lease, that guaranteed rent for that period of that time for that lease. So two of the big factors that affect value when you go through a sale and leaseback are the rental income, so the rental income that you receive from notional rent and any third parties that you lease out to, then also the length and the terms of the lease. So the longer the lease length, the higher the value of the premises will be. So that's worth considering as well. And it can also assist, sale and leaseback can also assist improvement works, extensions, or even new developments of GP premises. So I would say this is one of the big reasons why practices go through a sale and leaseback with ourselves. It is because they're in need of improvements or upgrades, they're in a dated premises, they even mean they potentially want to look at relocating into a new development, but they're struggling to fund that themselves. They seek help and assistance from the ICB and the NHS, but there's no funds or grants available for that either. So getting an external investor in can assist and resolve that issue because they'll potentially, as part of the process, agree to spend X amount of hundreds of thousands of pounds to upgrade and improve the surgery, or they'll even agree to assist you with redevelopments and relocations into a new premises. So getting an external investor can certainly help resolve those issues. And then the last point to make is that in most cases, you as tenants will have protected rights for a new lease upon expiry of the existing lease. So when the existing lease expires, you can automatically renew that for another for under the identical terms. So if you sign a 15-year lease, then you can sign up to another 15-year lease when it expires. Effectively, the clause, it's the Landlord and Tenants Act, and it stops the landlord from effectively being able to kick you out once the lease expires. You'll have some protection there. Okay, so they're the main upsides, the benefits of sale and leaseback, some of the downsides, or certainly some of the things you're going to need to consider before you go through the process. So leases can restrict what you do to the surgery. So if you wanted to make any upgrades, improvements, extensions, as I've said before, because it's not your premises, it's the landlord's premises, you will have to ask their permission to make any changes to the surgery. There may also be specific obligations on the practice. So the lease may say things like you have to redecorate the surgery every 3 to 5 years. And there'll certainly be a clause in the lease that asks you to keep the surgery in its current state of repair. So whatever the state of repair is on day one of the lease has to be the state of repair at the end of the lease. Otherwise, you can face financial penalties on expiry of the lease. If ultimately you'll be asked to bring the surgery back up to its original state upon expiry of the lease. There may also be, there will be liabilities under the lease, including rental payments. So it's very important when you're agreeing to a 15-year lease or whatever length of lease it is, that you are aware of your liabilities, and your liabilities will include making those rental payments. Now, as I've mentioned, your rental payments are going to be fully reimbursed by the NHS for the duration of your lease, but that is only on the proviso that you remain as a GP practice and continue to provide medical services. If for whatever reason you decided to stop doing that, then the NHS will obviously stop reimbursing you the rent, but you'll still be liable for the terms of the lease and the rental payment. So it's just important that you're not signing up to a long-term lease if you don't generally believe the surgery is going to be there for and be operating and still be present for that period of time. So it's a bit of you're weighing up the pros and the cons when it comes to the length of the lease, because on one side is the longer the term of the lease, the higher the value of the premises, but on the other side, the longer the term of the lease, the higher your liabilities and the longer your liabilities are. So it's just deciding between yourselves as a partnership how long a lease you want to put in place. Now, there are ways around it. So you can sign up to a long-term lease and perhaps put a break clause in the lease, which will allow you to exit the lease without penalty. You can perhaps put a 5-yearly or a 3-yearly break clause in there, but break clauses will also have a detrimental effect on the value of the premises as well. So like I said, it's just weighing up the pros and the cons of the long-term leases. Number 4, so your early redemption penalties as well. So just be aware that when you sell the surgery, or if you decide to sell the surgery and lease it back, you'll obviously have to pay back any outstanding mortgage payments, and your mortgage provider may charge you a penalty for paying off that mortgage early. Their loss of interest rates effectively. Sometimes that can be astronomical, so it's just worthwhile having a conversation with your mortgage provider to find out what those early redemption penalties are. You will also have to have 2 signatories on the lease at all times. So if you're a single-handed GP, you're really going to struggle to find an investor willing to purchase the premises and put a long-term lease in place. You're going to have to find at least another partner to join and to be signatories on the lease. There are alternatives to another partner, as we'll talk about earlier, or a little bit later. We'll talk about potentially transferring the contracts to another entity, which will remove that liability and resolve that issue of you being a single-handed GP. So we'll talk about that in a moment or two. Now, if you're in a multi-partner site practice, so you've got 5 or 6 partners, technically, if you're all willing to sign up to the lease in the first place, the first 3 or 4 of you can exit the lease without penalty, without having to find anybody to replace you on the lease. But when you get down to those last 2, then you're going to have to find somebody to replace you on the lease. Otherwise, you'll effectively remain liable for the terms of the lease. So it's just worth considering that as well. And then lastly, there are potential tax implications. So things like capital gains tax, stamp duty, land tax. It's just worthwhile speaking to a specialist accountant to find out what those liabilities are when it comes to your tax implications. And in terms of the process, very briefly, so if you decided to go through a sale and leaseback, the first thing that would happen is you'd need a specialist surveyor, such as ourselves, to come out and give you an idea of what the surgery is worth on the open market. You'd then look at agreeing the heads of terms, what terms you wanted on the lease, so such as the length of the lease and whether you wanted any break clauses in there, who's going to be responsible for what in terms of the repair and maintenance, etc. Once those lease terms have been agreed between the partnership, then it's a case of those lease terms going on to the NHS and getting approval from the NHS, which is a vital stage of the process. So every lease has to be approved by the NHS. Otherwise, effectively, you run the risk of not receiving reimbursement for the rent. So just ensure that that lease is always approved by the NHS. And then once it's approved, then you can go to market and negotiate with any interested parties effectively. So that is sale and leaseback in a nutshell. So an alternative option to sale and leaseback, as I touched on briefly, is putting a lease in place. So rather than selling the surgery and leasing it back, you're effectively retaining the premises, retaining the asset, and putting a lease in place yourselves between the parties, between the retired GPs and the remaining and the existing GPs who are going to hold the contract. So there are things you're going to need to consider when you're putting a lease in place. So a few health warnings, if you like. So it's very, very important when you put a lease in place that lease is a specific NHS GP surgery lease. So rather than just a standard commercial lease off the internet, for example, it's very, very important that you get a specific surgery lease. The main reason for that is because under a standard commercial lease, you've got the landlord and the tenant. When it comes to primary care in the NHS, you've got the NHS that need to be taken into consideration as well. So they are almost a third party in that lease, a third entity within that lease. And it's very important that the NHS are correctly documented when it comes to things like rent reviews, because that rent review, when the rent review takes place, it has to get ratified and approved by the NHS, and that has to be documented in the lease, just to protect you as tenants effectively, to ensure that you get fully reimbursed at all times. So just very, very important that you get a specialist GP surgery lease. And the main way to do that is just ensure that you're using specialist solicitors or surveyors assist you through the process, because they will always ensure that you've got a specific NHS surgery lease. Again, the lease will require approval from the district valuer and the NHS. So the district valuer will undertake a value for money report. So based on the rent and the length of the lease, they'll determine whether it's value for money for the NHS to continue to provide medical services from that premises. So again, very, very important stage of the process. Really need to make sure that that lease, whenever it's put in place, is always approved by the NHS. It's also quite important for the lease to be on arm's length terms. So when you're putting a lease in place between yourselves as retired GPs and existing GPs, sometimes it can be tempting to put favourable terms in place for the tenant, for example, because you've been colleagues for years and friends. Sometimes it can be really tempting to put in perhaps 12-month break clauses, or just put a 12-month lease in place. Now, as great as that is, and as possible as that is, there's nothing stopping you from doing that. It is important that you consider the potential future value of the premises. Now, even if you wanted to put a lease in place and retain the surgery now, if you decided in 5 or 10 years' time that actually you do want to sell, then those lease terms are going to have a significant impact on the value of the premises. And if you've got a lease that's only runs for 12 months and then can be renewed, you're going to struggle to sell the premises. So it's just important that you take that into consideration when you're putting a lease in place. It's not just that both parties are happy with the terms of the lease, but it's not having a detrimental effect on the value of the premises as well. Also, you need to clearly state the landlord and the tenant's responsibilities. So who's going to be responsible for the repair and maintenance of the premises, etc. It's effectively why a lease is put in place to determine what those responsibilities are, to avoid any potential disputes in the future. You may also want to check the conditions of your mortgage as well. So when you're putting a lease in place, but retaining the premises and effectively becoming the landlord, it becomes a leasehold premises rather than an owner-occupied one. And some mortgage providers, there'll be some restrictions within mortgages that stops you from becoming a leasehold premises. So again, it's just worth speaking to your mortgage provider to make sure there are no restrictions or conditions in the mortgage that prevent you from doing that. And if there is, it'll just be a case of having to reapply and reapply for a new mortgage. That's all under different terms. But obviously in today's market, that could result in quite a significant increase in rental in mortgage payments. And then again, there are also tax implications for putting a lease in place. So again, always worth getting specialist accountancy advice before you go through the process. Okay, so transferring the contract to another entity, so something slightly different, and this is a great option for failing or struggling surgeries or those who might be facing closure due to retirement of their GPs. So there are a lot of options out there for you. Rather than having to close the surgery, that you could look at transferring the contract to another entity. So there are PCNs and GP federations who can take over contracts now, rather than you having to close, and they will also become leaseholders as well, signatories on the lease. Again, a local practice can come over and take over the practice via a practice merger. There are several third-party organisations now who specialise basically in taking over GP contracts. That's worth considering as well. You can also put together an employee-owned trust. So rather than it being a partnership that hold the contract, you could look at an employee-owned trust, similar to the way in which John Lewis run their organisations, where every member of staff owns a particular share in the premises. So rather than just a partnership, it's everybody who works at the surgery who would own a proportion of the premises, and that'd be an employee-owned trust, so they can hold contracts. And then also the NHS as well, as a last resort, the NHS would be happy to hold contracts if it meant obviously keeping the surgery open, but they would probably require you to be looking at these other options in the first instance. So that's kind of transferring the contract when it comes to obviously not wanting to close the surgery down. Now, what some practices are doing now is using this option alongside a sale and leaseback, for example, or alongside perhaps retiring and becoming the landlord, where you would simultaneously transfer the contract to another entity. So you would sell the premises, and then a third party would take over the surgery as well and become leaseholders. So it just removes any liability from from yourselves as a partnership. And then what's happened when we've done this with other practices, or going through this process with other practices, is the GP partners would then just become salaried GPs or locum GPs or retire, whatever it may be, depending on their individual circumstances. So there are options out there for you, rather than having to take on those liabilities if that wasn't something that you wanted to do. Okay, so last one. So how to maximize the value of your premises. So prior to perhaps selling the surgery, prior to going to market under a sale and lease back, it's always worthwhile ensuring that you've got your ducks in a row and that you're maximizing the value of the premises before you do that. So one of the main ways to do that is to ensure that your notional rent is checked by an independent surveyor, again, such as ourselves, but there are obviously other surveyors out there as well. So just make sure it is get checked. So when you receive it from the NHS, before you sign and accept it, just pass it on to a specialist surveyor who can run the numbers, check it themselves, and just ensure that it's in line with the current market. The majority of us work on a no increase, no fee basis. So you effectively would do it for free for you anyway, unless we achieved an increase. So you don't really have much to lose in getting that process done. So I would probably be a huge advocate, unsurprisingly, of having that done every 3 years anyway, regardless of whether you're thinking of selling the surgery. But it is certainly imperative that you have that done if you are contemplating selling the surgery. Other things to do, so also ensure that any lease agreements and rental amounts are up to date. So if you rent any space out to a pharmacy or an alternative therapist, it's just ensuring that they've got a lease in place. It's the first thing to check. If they don't have a lease in place, you're going to need to put a lease in place and ensure that they're signed up for as longer term as possible, because again, the length of that lease is going to have an effect on the value of the premises. Ultimately, if you rent your space out to somebody but there's no lease in place, then the value of that area is pretty much worthless when it comes to valuing it for a potential sale. So it's just very, very important that there's a lease in place and that lease is up to date, and also any rental reviews aren't outstanding and they're all up to date as well. If you do have any spare space or space that isn't currently non-reimbursable, so again, your surveyors will be able to tell you that if there's any part of the building that you don't currently receive notional rent for, then it's worthwhile perhaps applying to the NHS to seek approval for reimbursement if you do now use that for GMS purposes. Or it might be looking at trying to get, like I said, an alternative therapist, a pharmacy, a dentist, whatever it may be, to come in and rent that space from you on a long-term lease, ideally, to help increase the value of the premises. And then the last thing, so upgrades, improvements, or even extensions to the surgery. As I said, there'll be a lot of investors willing to do that when you go through a sale and lease back. But if you do have the funds available yourselves, upgrading and improving the surgery can help increase the rental income, can help increase the value of the premises as well. So it'll be you that would benefit from any increase in value, rather than the investor doing it through the process. So effectively, when it comes to thinking about the value of your premises, the main factor that is taken into account is your rental income. So if you can increase your rental income, whether that be the notional rent or your leasehold rent from alternative therapist or whoever else rents space out in the premise, if you can increase the rental income even by just £1,000 a year, that can increase the value of the premises by 10, 15, sometimes even £20,000. It has a significant knock-on effect to the value of the premises. So certainly, from our point of view, BW Healthcare Surveyors, we can certainly assist you through the process. When we send out a surveyor to value the premises for a sale and lease back, we'll also automatically look at all these things to check to make sure you are maximising the value of the premises. So certainly something we can assist with if required. Okay, so that's pretty much it for me. Hopefully I haven't bored you too much. You found it relatively useful. You've got some takeaways in terms of what to do with your premises. It's probably opened a can of worms for some of you, and there's probably an awful lot of questions and queries that you have. Obviously, I'm here. We're here to answer any questions or queries you have now. Please do use the Q&A box above. If anyone has any questions, more than happy to go through any particular circumstances now. But equally, if there's no other questions that you have, please feel free to get in touch. I'll provide my contact details to the LMC as well. So yeah, there'll certainly be some certainly willing to have a conversation with anybody who wants to talk about their particular circumstances. So right, okay, so we do have a question. So it says here, even with a lease, if something happens to the GP partners And then if they are not able to function as a GP surgery, that's a risk. That's a risk too. How is that easier than owner-occupied property? Well, yeah, I mean that is the issue I think with leasehold premises. That is the problem with the liabilities of being a leasehold premises. Is if something were to happen to the premises, then yes, you are taking on those liabilities. So as I mentioned, I think if there's any doubt in your minds that potentially the surgery isn't going to be there for that period of time, so if you're looking at having to sign a 10 or a 15-year lease, then it's probably worth contemplating perhaps not signing up to that long-term lease or putting those break clauses in there. So if you put break clauses in there, in the lease, then it's going to protect you against those potential liabilities, but it is going to reduce the value of the premises. So there are ways around it, but you're just going to have to take a hit on the value of the premises. That's all. If you are wanting to remove those liabilities, unfortunately. Another one is just asked if we could just explain arm's length in a bit more detail. So yeah, no, my apologies if I wasn't very clear when I explained that a moment or two. But an arm's length just effectively means taking it away from the fact that you are connected parties, that you are obviously, if you're putting a lease in place that between exiting and existing GP partners, sometimes it can be very tempting to put favourable terms in there. So it's just taking you away from that close connection, that friendship connection, or that colleague connection. Potentially just using specialist solicitors and surveyors to ensure that any lease terms you're putting in place aren't overly favourable and aren't going to have a detrimental effect on the value of the premises. So, but again, if you use specialist solicitors and specialist surveyors, they'll do that as a matter of course to ensure that you're not signing up to anything that's going to have a negative impact on the value of the premises. Okay, so another question, is there an average to get an idea of the value of the premises? Historically, it was between 10 and 14 times the notional rent. Yeah, so and that's a funny old question at the moment, to be honest with you. It's a very strange market at the moment with rising interest rates and things. Has been quite difficult to determine the value of primary care, because effectively what dictates any market, and any property market, is the transactions, the properties that are sold within that market. And unfortunately, properties aren't getting sold in primary care at the moment. A lot of everything seems to be on hold. So I would say 10 to 14 is probably low. I would say 12 months ago, we were advising, and the multiplier was probably close to 15 to 20. So 15 to 20 times your notional rent. I would say it's probably a lot closer to the 15 now than the 20. But again, it is very, very difficult to say in this current market. Unfortunately, it's probably, if it is something that you're wanting to contemplate going through, it's probably worth just getting a surveyor out to give you an idea, so they can run through the measure your exact surgery, look at the local market in your area and things, and get a more specific valuation, because it can be, yes, very difficult to just generically put a number on it, unfortunately. But I would say, yeah, maybe around 15 to 18, something like that, will certainly give you a very, very rough idea of what the surgery might potentially be worth when you go through a sale and lease back, certainly. Okay, so if there aren't any more questions, I can give it another couple of minutes. But effectively, like I said, I will pass on my contact details through the LMC. So my name's Will Ellis. The company's BW Healthcare Surveyors. So we're just here to assist with anything premises related, to be honest with you. So if you've got any questions, we can go through we can set up a Teams meeting to talk about your individual circumstances if required. We can go through free consultations. So we really are just on the end of the phone, just to help educate you, I guess, to what your options are before you even have to go through the process or spend any money in determining what to do. Feel free to give us a call or drop me an email. I'm more than happy to have a chat at any point. So look, that looks about it, to be honest with you. I don't think there's any more questions coming in. So I will leave you all to your very, very busy Monday afternoons. I will, like I said, we have recorded this, so I'll get the recording sent through to the LMC and forwarded on to you. I do hope that some of you found this very useful and there's been some takeaways. And like I said, again, if you do have any questions or queries, feel free to get in touch. Thank you, and bye for now.